October 13th. Today is Columbus Day. The markets are open. Bond market is closed. However, equity markets are in full tact and ready to rock and roll, coming off of a dismal week last week, especially on Friday. Just quick recap. I mentioned Friday morning prior to the market open. I said if we get a good flush early, then I think we can really buy that dip. But what happened was markets actually opened up a little bit, tried to rally, and that was pretty much it going into the afternoon session. And sure enough, I mean every asset class just about got liquidated across the board. And that's what happens. Risk happens very, very fast. We are now coming back into these washout readings in our indicators. So we called a pretty good bounce last week for that one day, I believe it was. But now we're coming into some extreme readings again. I just want to run them quickly by you, and also some key levels to look out for. A lot of the targets to the downside have been met again. So I mean, this is going really quick. And like I said, if it's too fast for you to price action, just step aside and wait till things start to come down a little bit. No need to get involved. Try to be a hero here. I would not be looking for anything big as far as a bounce is concerned right now. However, in these short-term downtrends, you do get rip your face off rallies like this, and I mean it cold-heartedly here. This could happen at any given moment. So you have to be careful out here. But so let me just show you what we're looking at. McClellan Oscillator. We still can go lower. So we're not quite there yet as far as the reading, washout reading. And this is where I like to look for is something like this, these areas here, down below -70 and below the Bollinger Band. And then we can really explode higher. So that has not really given me anything. Tells me that we can possibly go lower. Let's take a look at the NDX 50. The stocks above the 50-day moving average in the NASDAQ. This is in the area. Can it go lower? Of course it could. So this also could tell me that we can move a little bit lower. But it is oversold. So if it does turn up to the upside, that wouldn't surprise me. So all right, so we are in this area. SPX, ATR, another good way of reading volatility if you don't want to look at the VIX. VIX really hasn't gone anywhere up until obviously the last couple of weeks. But this is up in this area here is when markets start to at least bounce. So use a little bit of caution. New lows, as you can see, we're starting to spike up. What I wanted to show you was, I think I had one more here. Let's take a look at this guy right here. Here we are. Okay, now this is the the stocks above the 50-day moving average on the NASDAQ. The other reading I showed you, which was here, you can see the difference at 28, right? And this one here now at 19. So the one at 19 you can see has more move to the downside where we are now ready for some sort of a dead cat bounce, so to speak. But let's keep an eye on this on these indicators, guys, because it really gives you a good idea. Lastly, is what I want to show you is the BKX, the bank index, which we're going to have some large banks are going to start reporting, I believe, this week. This is critical here. This is one of the banks. If banks and financials are really getting hit hard, there's no way and chance that we're going to have a good follow-through rally and possibly make new highs, at least at the moment. So we want to watch the banking sector, and we want to watch, of course, technology. And as you can see here, we broke this long-term uptrend line from November 2012. That was the election year, if you recall, and then right after that was Sandy, Hurricane Sandy. And then you can see now we're starting to break this. Now, it could easily recoup this loss and break back up again. So it needs to move now. It needs to start moving this week to break back up and break back above the 20-day to 50-day moving average, and then start to at least get up at these levels here. Okay, if it starts to really break down, I'll put some downside targets on here, but that's a little scary, so you need to really pay attention to that. Let's take a look at the indices. Friday I put a little zone area, 1889 to 1900, and sure enough, we closed in that zone. We're trading now up about 5 handles. Really no conviction at all, which is okay. I like to see markets really start moving in the market hours, normal market hours, 9:30 to 4 Eastern time. When you get a move in a pre-market, it's usually premature, and then we start getting a little bit of sell-off. So, but we're in that zone area where we're looking for a bounce, and that bounce will probably take us back up, if anything, just right in this area, 1935 to probably 1950. and then we would reevaluate it. And that wouldn't be anything other than some sort of retracement rally. So let's keep that in mind. But we're in the zone area now. We could easily fail, as we all know, miserably here. Okay. In the overnight, early on, we were down. Dow Jones was down 100 handles, and the S&P was down another 12 immediately. As you can see, we went down below in the pre-market to 1880. So it can get there. It can get way below that. So just remember, oversold means it's oversold, but it could stay that way for quite some time, as well as overbought, as you can see up in these charts here, how overbought we have been, and we actually stayed that way. Okay, let's take a look at the diamonds. Diamonds hit the target of the 200-day moving average. Now let's see if it can bounce off of this 200. So let's keep an eye on the diamonds. As you can see, it really took it hard. Once you get these large candles, and I always mention it means there's extreme volatility starting. When you see these smaller candles, and then you pick up in large volatility, that means that the price is ready to vacate the area. So when you see them, and we start making a new trend, more than likely that's going to follow that trend, and which was in this case down. So 200-day hit. Let's see if we get a little bit of a bounce here on the Dow Jones. IWM, what can I say? I've been saying that this here, once we tagged this 61.8% over here, I took it all off, but just to clean it up a little bit. The first target was this. This was the next big target, and now we're looking at 103.40 being the target. We're almost there, but if you open this up a little bit and I show you a weekly chart, you'll see it's not pretty. This is actually really bad. Could be a double head and shoulders pattern, breaking down from this big neckline. And then if that's the case, you can see we got the 1272, the 1618, and then of course we have the 200 weekly. This is all on a weekly now, okay, guys? So just keep that in mind. Not looking too pretty. So let's see what happens with IWM this morning. If IWM actually hits a target and then starts to bounce. I mean, it's definitely oversold. It's got plenty of oversold readings. You could pick an indicator. But again, it doesn't matter. Oversold is oversold, and price is what pays. So let's take a look at the transports. Hit its target of the 200, and I believe we missed it by probably about 15 cents or so on our next 1272 extension. Okay, so we're just about there on both of these targets, and the next one after the 127 would be the 1618. And if this really starts to get going to the downside, so does the market, and I think the markets will be in extreme difficulty in trying to buy that dip for the buyers of dip, at least for now. Now, this is very, to me, I think it's healthy. I think it's a good purge, the system, so to speak. And then it all depends on how far this thing does go as far as the markets are concerned. If the markets start to really sell off and break down, and then, as you can see, sentiment has changed dramatically now, where a lot of bad news is coming out of Europe. So it's not a really good thing, but it's a good thing that at least the markets are starting to purge here. So let's see, because if we can get through this week and next week, the markets start to stabilize at the end of October. That's usually how seasonality trends start to happen, and then we start going into November and the markets start to be bid up going into the holiday season. Now, that's usually the case. Doesn't have to happen, right? We've been up since the end of 2012, so we could have had a Santa Claus rally for the last 2 years, and now things are changing. So remember, don't bet on anything so easy, so to speak, because the markets are made to fool the masses. Remember that. Okay, not that I don't think it will happen right now, but I just need a lot of evidence to see if we can get a decent shakeout like we've been getting. And then maybe chop around for this week, next week, and then start to really rally at the end of October. That might entice me a little bit more. That this dip will get bought, and maybe we might see 2100 in the ES. So let's just keep that in mind. Long-term observation. We're not there yet, though. Last is the Qs. As you can see, Nasdaq really got hurt bad Friday. Really got hurt bad. A lot of these higher flyers, and I've been saying, watch them because they're not really moving, and they started breaking down earlier than the index did, and the Qs were held up because of Apple, because of its product launch and a couple of upgrades, and Apple's heavily weighted in the Qs, and then sure enough, Apple started to go, and there goes the Qs. So first target just about met here. We'll be here. Next target will probably be the 200-day moving average. I'll do some downside work here just to be sure. But the next target, rest assured, would be that 200-day. All right, guys, be safe out there. No reason to trade if there's nothing to do. And if the market moves ahead of you, wait for at least a pullback or whatever you're looking to trade. Let it make sense to you before you start entering a trade. It's a real fast market out there, so just be careful. We'll see you tomorrow, guys. Take care. Let's see if we get that bounce today.